Hey, this is Carl and John from DayTradeToWin.com here. Today we'll have a look at one of our methods that will help you avoid having many losses in a row. When you trade breakout strategies or trend following strategies, you will often get into a situation when the market just chops around in the area where you want to enter your positions, be it long or short. That will often lead to many false breakout signals and in turn lead to losses. One losing trade is an inevitable part of day trading. Two losing trades in a row also happens, but it's not the end of the world. But once you start having losing trades, quite often you get into a series of losses that will eat into your trading capital and have you start trading emotionally to recoup the losses, and that's not good. When we trade our Atlas line strategy, we use a great technique to avoid getting caught with multiple losses. John will now show you the basics of this strategy. Go ahead, John. So what happens when you have multiple losses in a row?
Obviously, we're going to get killed. If it's a whipsaw back and forth, I don't want you to take trade after trade after trade where it's just going to do more damage than what it's worth. So let me add here as an example, when you have two back-to-back losing trades. So two back-to-back losing trades, let me see if I can find a whipsaw kind of day to show you how. So for example, you have a signal here that says go short, 23.82 quarter, and then you're stopped out because it's a prove it stop. And then you have a long for a recovery. So it's not back-to-back losses or two losses in a row of the Atlas line crossing. So it's not the same thing. But if you have a day, and the way that I like to show it is, let's say that this is the Atlas line here, and you have one signal to go long, and it fails. It's a loser, it's a prove it stop or time-based stop. And then you have a follow-up, which is a short, and maybe it's another prove it stop or a time-based stop, but you did not make the target, and you did not make the target to the short side. So these are two back-to-back losses on trying to cross the Atlas line and continue. So the problem is that if I try to go long again a third time here, or a fourth time, or a fifth time, it's already proven to me that it tried to go beyond this area and couldn't, and it tried to go beyond this area to the short side and couldn't. So I'm not going to take another Atlas line crossing because this becomes very strong support and this becomes very strong resistance. If it decides to eventually break out and close two candles above or two candles below the area where it tried and got stuck and failed and flip-flopped and gave you the two losses, now it's cleared the way, you're okay. But trying to take another trade long, for example, so you get stopped out long, you get stopped out short, unless you have proof that it's breaking where it already failed, there's no reason to take another signal. It's a channel, it's a range, it's stuck in an area that we have to wait until it comes out. And the days that I find that this happens are days that have an afternoon news event, like an FOMC, like an afternoon news event. An FOMC is typically all there is in the afternoon because everyone is waiting. They're on the sidelines until the news is released. So when the news is released, everybody buys and sells and becomes committed to a direction. But leading up to the news, you typically have a lot of chop. So just be careful when you see an FOMC in the news calendar. Expect it to be a little bit more choppy than normal, and it doesn't have to be an FOMC, but if there's two losing back-to-back signals, let me see if I can actually find, I know we had some recently, so let me see if I can show you an example of what I mean. This actually may be, it's not exactly the right thing. Let me see if I can find here another example. Okay, this is actually similar to what I'm looking at. So you start off the day, you enter long, you're expecting the market to go 1 times the ATR, and instead, for whatever reason, maybe it's news, right? Maybe news is happening here at 10 o'clock, and it, you know, whether you took the trade or not, you still have to think the market failed to go higher after this signal. So this, for our purposes, is a prove it stop, or time-based stop, or catastrophic stop. Then you have a follow-up to go short. So this signal here to go short, and again, market did not make or was unable to go 1 times the ATR lower. So you have to stop and you have to ask yourself, you know, I tried to go long, I failed. I tried to go short, I failed. Immediately place a line at the lowest low. You want to understand that this is support that it could not break through, and you want to place a line on the highest high. This is resistance that the market could not move beyond, it failed. This is the area where the market will be chopped up, a channel, a range, support, resistance, however you want to look at it. There's a lot of different names for it, but trying to go long in front of this or trying to go short in front of this is going to be like a double bottom, a double top. You're going to be in trouble trying to assume it's going to happen. That's why as we move forward, 2 candles that close outside this area where it failed, now you can go long and now you can go short. So as I go forward here in time, if you see 2 candles closing here, this is my opportunity now to go short, to go long. This area should now be broken. It should continue outside this area. In this case, it still went right back inside the channel and got stuck. But I don't want to take another long or another short until it breaks outside and beyond this area as evidence it's no longer relevant. In this case, it seems like it is, but I want to make sure that I'm not taking 3, 4, 5 trades against it.
Super, thanks JP. Well, we hope you learned something from this and that you can utilize it in your trading. And remember, if you start having losses, it's always okay to stay out of the markets. Take the rest of the day off, clean your house, walk your dog, watch a movie, whatever it takes for you to not start trading emotionally. Just because you're a day trader, it doesn't mean you have to trade all the time. One of the most important tasks of a successful day trader is knowing when to stay away from trading. Well, that's it for today. Take care, bye now. Thank you for watching. We have a whole bunch of videos available on our YouTube channel, and we're producing more videos for you to watch every week, like live day trading, educational videos, and more. So please subscribe by clicking the button below in the bottom right corner of this video. Please give us a thumbs up for encouragement, and always, if you have any questions, feel free to reach out through the comments below. And remember to visit daytradetowin.com.